Hi there, ladies and gentlemen. It's James Marley here, co-founder of Livewire Markets, and I'm joined by Sam Reynolds, Managing Director of Octopus Investments. Now, regular followers of Livewire may have heard an interview with Sam with my colleague Patrick Poke on the Rules of Investing podcast last year. And given that renewables is such an interesting and burning topic for a lot of people out there right now, thought it was a good opportunity to get Sam back onto Livewire to hear how things have been going in the renewable space more broadly and also specifically at Octopus. So Sam, thanks for taking the time to catch up and great to have you back on Livewire.
Thanks, James. Yep, no, good to be back. Appreciate you taking the time also.
As I said, I know a bit of background on Octopus because I've been following what you've been doing since the Australian chapter, shall we say, of Octopus launched. But for those who don't know, do you want to give us the 101 and introduce what Octopus is?
Yeah, definitely. So Octopus is a global fund and asset manager. In renewables, we have about $6.5 billion in renewable energy assets under management. Most of those are in Europe. So we're the third biggest owner after two utilities of renewable energy in Europe. We've also just built and connected Australia's largest solar site, which is called Darlington Point. We've got about 260 renewable energy sites operating under our management on behalf of our wholesale and institutional investors. And those investors come from all around the world, Australia, UK, Europe, South Korea. We're seeing a lot of demand in this space, probably one of the hottest sectors going on at the moment. And we set up in Australia back in early 2018 to really sort of unlock some of the renewable energy opportunities in Australia for investors in Australia and some of our investors overseas.
People often think about Australia as being, ripe for the picking in terms of the resources available for renewables. Octopus has a massive footprint, outside of Australia. Why has it been? Why was Australia later on the list?
Yeah, it's a good question. So we did look at other markets, and so the US and India are other big global markets for renewable energy. Australia, we chose. There's some big similarities with the European system, legal system, and property and land, that sort of thing. A bit easier to get into the market. But the fundamentals in Australia really stack up. So huge amounts of wind and solar resource, lots of land to be putting renewable energy on. But Australia is also a country 70-80% reliant on fossil fuels. So still at the start of its renewable energy journey, where Europe, the US are probably 5, 6, 7 years more advanced in their renewable energy uptake. Australia is on that journey and hasn't been a happy hunting ground for everyone, I'd say, for all investors into renewables in Australia. But that creates the opportunity for a company like Octopus, where we have been at the forefront of helping countries adapt to the renewable energy transition, structuring products for investors that work. And so that's been the big draw factor for us to set up a large team in Australia.
You alluded to it earlier on. You've got your Darlington Point solar farm as the flagship project for Octopus in Australia. What's happening at that project and what's the current status?
So project is up and running. It's been connected. It's going through its final testing with AEMO and Transgrid, which is just to get the project up to full export. So that's moving in the right direction. We did have some delays on getting that project connected, like others, but we did get there in August last year. So we're on track on that project, and but it's been a bit of a learning curve for us as well, building and connecting in Australia. There's some challenges in Australia compared to Europe and other countries we've operated in. Mostly around grid would be the number one. And that's probably one of the biggest learning factors we've had in the last 3 years since we've been on the ground is really understanding grid in Australia. And probably what I'd say is that grid in Australia is your number one risk. It's more important than PPAs. It's more important than anything in this country.
What can you explain PPA and maybe just go into the definition on the grid? On grid, I think most people get, but talk through PPAs.
So PPA stands for Power Purchase Agreement. So when you're building a renewable energy site like a Darlington Point, what we'd like to have is a power purchase agreement that looks after a high percentage of the revenue. So that might be 60-70% plus of the revenues. So, and then the other 30-40% is what we call merchant. So that is when you're at risk to the energy spot market. In Australia, the spot market moves around quite a lot, but we like to come into these investments as relatively safe, stable, almost boring long-term yield plays. So that's why we like a high percentage of the project to be under a power purchase agreement. And that might be with an energy retailer, might be with a large corporate who is wanting to hedge their energy price, also buy green energy. So when I was talking about the grid, look, lots of assets in Australia have been plagued by grid issues, delays with connection. So getting the asset to connect on time so you can export the energy and then generate your revenues. Also loss factors. So if you've built a project where you've chased yield, chased sunlight, or chased the wind, but haven't really looked at the grid in a lot of detail, so you've built out on a weaker part of the grid, and that might be somewhere like Northern Queensland, and then you're trying to get the energy from Northern Queensland down to the major load centres, Toowoomba and Brisbane, you get loss factors along the line because it might be a weaker line or a thinner line. And what you want to be doing in Australia is building on the biggest pipes for transporting electricity, or factoring into your financial model when you're closing the deal is that, you're factoring some loss factors or constraints because you haven't built on a strong part of the grid. Doesn't mean you can't get your site up and running. It just means you really need a team internally that can understand the assumptions to put through your 35-year model.
So how is that changing the way you're thinking about operating?
Yeah, so we've had a real change. So in Europe, when you invest into a renewable energy site, which is called construction ready, so that means you've got your development completed, you've got planning approval, you've got your grid offer to connect your site, and you've got land secured. And that's when we would come in and start construction. Now, what we found in Australia is the sites aren't really construction ready. Not all those things have delivered. Land is definitely there, planning's definitely there, but the grid is still a bit uncertain. You can't put a finger on sort of some of the construction delays as well. So what we've done in the last 7 months is really strengthen our bench strength, if you like, for grid professionals. So hired Dennis Friedman, who was head of investment and development from AusNet, Australia's biggest grid operator. Hired 2 other investment directors, Sonia and Darren, also from AusNet. And really that is about, right, we need the expertise in-house dealing with the number one risk in Australia. And so I'd say that's been the biggest change for us over the last 12 months. And if you think about it, it's relatively simple strategy because you think actually all developers, everyone has to talk to the grid. And if that's where the risks are, then we need to tackle it head on. And that's why, we've hired strongly in that sort of area.
Interesting. I'd have to say just about every second interview or every third interview I do with asset managers at the moment, the topic and the broad topic of decarbonisation is raised as an investment tailwind or an opportunity. What do you see as the growth opportunities in renewables at the moment? How does it look for Octopus?
Yeah, definitely. So we think the growth opportunity is actually getting in, for us, it's getting into the sites and getting into the assets a little earlier. So start to getting into the grid, not coming in at construction ready. We will still do that, and we're still working with developers on that front, but starting a little bit earlier into the process. So a year or 2 before the sites are construction ready. So that means putting my team firmly in place to manage the grid and understand the grid risks of whether we should be taking a particular site forward and having a look specifically where it is on the grid. And that's also things that my team, who have been in the grid space for 10, 15 years, they know, they have a fairly good idea of which transmission lines, which upgrades to the grid are going to get done. So good idea of where we should be building in Australia. But also having my team embedded in the community a bit more. So looking at how we can make the Octopus brand a really positive aspect to the community. So looking at initiatives from the community on the ground up, which would see a renewable energy asset as having a really positive impact. And that might be reskilling local workers into renewables. It might be things like scholarships to help get more females into renewable energy infrastructure and engineering. Might be solar street lighting, whatever the things that we can bring our expertise to front and center. And that needs to start a few years before actually you turn over any soil. So that's the opportunity that we're looking at. But the other thing for our investors is it means we know the asset from the start. We know the community engagement's been done right. We know the grid's there. So our investors who are coming in for a 35-year asset or even maybe shorter time, then they're going to get the benefit of us really knowing the history of that asset from the start.
Sam, you talked a little bit earlier about people learning some lessons and investors not getting the outcomes that they would want from renewables. And I'll be open, when we publish on this topic, you can still see it's quite divisive. There's people that don't believe renewables can offer the solution that they promise. What do you think is the fairest criticism of renewables that needs to be addressed? If you put yourself in the perspective of an investor looking to generate a reasonable return.
Yeah, it's a good question. I think the institutional investors is probably a good place to start. They're looking at it very closely. We did a survey on institutional investors a few months ago that had 80% of all institutional investors are looking to increase their exposure to renewable energy. There's a few things that have sort of stopped them historically. One is probably, look, not all institutional investors have been successful in renewables in the past. That's probably a big thing. Federal government support for renewables hasn't been amazing in Australia. State government is a lot more advanced. They're moving forward a lot quicker than the federal government and taking things on. Lack of PPAs, so quality PPA, power purchase agreements in the market that can give them some energy price security. And then the other one is grid. Grid, they've seen sites that just haven't delivered on their investment returns because the assumptions that were put into the model on grid just haven't turned out to be true. And sites have been built in parts of the grid in Australia, which really they shouldn't have been built on if you really understand the makeup of the grid in Australia. So, but that's the opportunity for a company like Octopus. It built in the right team to look at grid. We've hired recently an ex-Lord Mayor to look at community issues. That is firmly with us to make sure we're providing the investments that are right to create security and the right framework for institutional investors to come into this space. And so, I'd say that's up to sort of organisations like Octopus to change that mentality and have renewable energy as a big part of your portfolios going forward.
The discussion around the shift to renewables, it's not just a investment discussion or an opportunity. There's also the regulatory environment and the political, movement as well. Have there been any specific policies that are having a positive or negative impact on the ability to get renewables to market? So
I'd say some of the positive ones, uptake of renewable energy zones in Queensland, New South Wales and Victoria. So renewable energy zones are a dedicated zone that has stronger access to the grid where it would be managed by the government to allocate a specific number of megawatts, wind, solar, storage, pumped hydro potentially in a specific area, and you can have more confidence on the strength of the grid, because there'll be new transmission built specifically to accept energy from that renewable energy zone. I think the other interesting factor is around, which is specific to the Victorian and New South Wales governments, is transmission line upgrades and investment. So this is when actually the Victorian and New South Wales governments are stepping outside the federal policy to get transmission line up and running, and they're actually doing it themselves because they want to accelerate the build out of transmission to entice more renewables. And I think what's interesting is New South Wales and Victoria, this is a Labor and a Liberal government, so it's not politically based. This is just actually the federal process is taking too long, and we want to get this stuff up and running. And there's an announcement, the announcement this morning just on Yallourn coal-fired power station in Latrobe Valley in Victoria. Now, great case in point for why the Victorian government is wanting to sort of increase renewables into the space and bring more energy to the grid. Yallourn's going to close 4 years earlier than forecast. So it was going to close in 2032. It's now going to close in 2028. Now, Yallourn looks after about 20% of Victoria's energy. It's a big lot of generation to be taken out of the market, and Victoria's got to get going to replace that. Renewables needs to get on with it. Storage needs to help out with firming. Pumped hydro, all these things need to start to happen so that Victoria is not caught short. And this is happening this will happen in other states, that coal-fired power stations will shut early as investors start to shun burning a dirty rock effectively to create energy. It's got to be done in an orderly way, because we don't want to see price spikes. And the challenge for the government is when these big coal-fired power stations close early. That's when you're at sort of the panic stations almost, to go, right, where are we finding that generation? If 20% of the Victorian space is being taken away 4 years earlier than expected.
Interesting. What about from the investment perspective? What flows of money, who's being active in the space, and who's being active at scale? Like, what can you tell us about money coming in to support it?
Yeah, so superannuation funds in Australia, look, there's probably only out of the sort of say 40 or 50 big superannuation funds, there's probably only 4 or 5 who've gone into renewable energy. Some are looking overseas, have gone to the US to get their renewable energy fix, if you like. Look, a lot are coming out with a net zero emissions by 2050 target. So Aussie Super, Australia's biggest super fund, they're about 160 billion, have just come out. Hester, Cbus, UniSuper, Aware Super is the First State Super and Vic Super combination. They're about 130 billion. So all these super funds are coming out talking about decarbonisation and climate change and wanting to make it a big part of their portfolio. So, and as I said earlier, 80% of institutions want to increase their exposure to renewables. And that's also drawn from their members as well when they do member surveys. So we have this wall of capital wanting to get into this sector. It's happening in Europe. It's happening in the US. Returns are really compressed over there because of the amount of capital chasing renewables. You're looking at sort of 4 or 5% IRRs. Australia is still high single digits. That's the opportunity for investors now. But these big superannuation funds and pension funds, if they want to go into a sector that has impact, can look at climate change, they need to get hundreds of millions away in investments. Now, there's few other sectors that can do decarbonisation for them apart from renewables, where they can get those ticket sizes away. So the Australian supers, they're joining forces. They're getting even bigger. They're growing. If the government increases super contributions to 12%, they're going to get even bigger. So this is only going to build on itself. So they're going to want really large ticket sizes, and renewables can give them that. Renewables is almost probably slightly on the small side. Things like pumped hydro are going to be really interesting because they're sort of $1 billion tickets for the big ones. But there's going to be a bit of a feeding frenzy, and Europe is a good crystal ball for what is going to come to Australia. And early movers are going to be the key winners in the Australian market.
So you've mentioned those offshore markets being more advanced than the domestic market. What's it going to take to see a step change for down here?
Yeah, it's a good question. So I think, look, some more consistent federal policy would be great. The renewables market doesn't necessarily need subsidies. It stands on its own. It does need a bit of help sometimes with things like maybe getting storage up and going, like so that you can get these sectors into mainstream. And once you're in mainstream investment where pension funds, super funds, insurance companies are all looking at it, that's when the floodgates open. That's when you've got billions and billions flooding into a sector. And it's no longer a niche transition sort of area. This is mainstream investment. And so the federal government policy, some help around PPAs or power purchase agreements. So even government PPAs. Government has the lowest cost of capital. They should be helping out on these things to provide some of that energy security. This is not to be done for 20 years. This is for 2 or 3 years, just to help get this market up and running for investors to get in, have a good time in there, enjoy investing in renewables, so that they can show their members that this is a great sector for them to be in. And grid, as I've spoken about, sorting out grid, making sure the grid is up for taking on intermittent energy generation like renewables. So those sorts of things happen. I think the state governments are moving forward quickly on this stuff, and we're in good consultation with them. And it takes consultation. It takes my team who understand grid, understand the community, understand energy pricing. All those things need to come together. You can't just be sort of beating up the government. They've got to provide energy security at the end of the day. There's also a social impact on things like Yallourn power station closing early. It's probably 400 or 500 jobs lost in that area. So there's got to be other packages there that, as I say, reskilling coal workers into renewables, which would be great for things that Octopus want to do, having training programs that can do that. It's got to be a full package and coordinated effort. But you need a team. Octopus needs the team that can talk to different parts of those stakeholders as well.
Okay, well, listen, we're gonna wrap things up on hopefully a bit of a point of interest or something a bit of fun. We've been running a series on Livewire called Stats Incredible, and I've asked you to put together a statistic that you think tells a great story or an interesting story that our audience can take a bit of insight away from. So what's your incredible stat for us, Sam?
It probably comes from our institutional fund survey. So we went down around all global pension funds, just sort of asked them about, what are they looking to do on renewable energy over the next 10 years? And when we got all the figures, the number that came back was 800 billion of further investment. That's outside of government. That is institutional investors. So 800 billion US into renewable energy over the next 10 years. And so that's over $1 trillion Aussie dollars. And that is a huge amount of investment. And for me, being in Australia, we want as much of that to be ploughed into the Australian market as we can. And when you get to that level, when you're ploughing in billions into your energy space, that's when the cost of capital comes down. Cost of capital makes up a big part of your energy price. That's when the energy price starts to come down. And that's when a sector like this really starts to hum along. So $1 trillion over the next 10 years. That's why we see it as the hottest sector in the world.
Great. Well, Sam, that is a truly incredible stat. I think you have to double check my zeros on a number that big. But,
Yeah, I think it's 12. But yeah, definitely double check. Yeah.
excellent. Well, listen, thanks for jumping on the call. Great to catch up, and yeah, appreciate you talking us through what's happening in the space.
Great, James. Thanks for your time. Cheers.